Good morning, everyone, and welcome to the On Time, On Target Morning Brief, where we invest with fighter pilot precision on a daily basis. Got a great show for you today. We're going to tell this is Biden's first full day in office. So we're going to revisit a question I get asked probably 10 times a day, what are the investing themes under Joe Biden? We've talked about that a month ago. We talked about it a couple weeks ago after the blue wave for sure was going to happen. And then, of course, now we have inauguration yesterday. So we'll revisit it again today just to make sure that your money is in the right place going forward. If you're catching us on replay, thanks for subscribing and hitting the notification button to get notified on a daily basis. And if you want to join us live, it's only $25 a month. Good way to come on in the room and chat with me while I'm having my live show, and I can answer your questions. Great way to invest in yourself. With that, let's go ahead and get started. All right, welcome back, everyone, to today, Thursday, January 21st of 2021. Make sure you have your window set up with your Q&A window set up, as well as the chat room and panelists and all attendees selected. I do have some 1 long and 3 shorts that are put in the chat room for you. And standard disclaimer applies. This is a financial education presentation, so you have to do your own due diligence for acting upon anything you hear me say this morning. All right, our mission objectives for today are to grow our money, protect our money, and live off our money. Particularly our long-term investing topic today, as you heard in the open, is to grow our money. What are the investing themes that are going to outperform or poised to outperform is how I technically have to say it, under the Joe Biden agenda, if you will. You know, there were several executive orders signed yesterday. There will be more today. Again, leading vaccination themes kind of first, but after that, what are those agenda items going to be, and where's the money going to flow, at least during the, guaranteed 2 years of blue wave? So try to, where's the money going to go there, and how can we invest in that? The question of the day today is the difference between a mutual fund and an index fund. That is not commonly known, so I will talk about that once we get through the open. Our flow today is going to be long, short, open, short, long. What that means is we're going to take a look around the world. We're going to keep everything in perspective with where the market is. We're going to come back to the headlines here in the U.S. We're going to take a look at the 6 long-term investments that you see there. Those are all index funds except for the last one, which is DKNG, which is DraftKings, which many of you know about. And then we will execute the market open. Again, I'm looking, the futures are kind of flat. They're a little bit in the green earlier, but I think that's fading. So if you're setting up for the open, I'm going to look at all 3 of these shorts that you see in the chat room. And then let me hit those one more time. Since a couple people are joining. So that's what we have for our 3 shorts. And then our 1 long is only there. I don't really like it. It's only there if you're in an IRA and you can only trade long. If you want to trade long, that's the name I have for you. All right, we'll execute the market open. We'll get to the Q&A and question of the day. If you have any contingencies, reach out to me at steve@ototnow.com. And again, if you don't know what we're doing day trading wise, go to ototnow.com for more resources. All right, let's go ahead and take a look at TD Ameritrade Think Pipes. We're going to go around where we've been, in the S&P for the past 9 months is what you're looking at, the S&P 500 chart from left to right. Again, you had the up channel. We had some congestion going into the election, and then pretty well, let's see, the election's about in here, pretty well straight up from there. Even, January 6th, the market didn't care about yahoos in the Capitol. And then we had the good inauguration yesterday. That's a little bit of euphoria, and then right on into market highs in the S&P 500. Now, I will say with markets, when markets hit new highs, a lot of people are like, well, that's the time to sell. And it's like, well, history's not on your side there. Market hitting new highs means more new highs, right? So you've seen that in kind of the past decade. We shall see. I think one of the competing forces is there's the fear of missing out. So money's rushing in that might have been on the sidelines, waiting for the inauguration to see if it was going to be a debacle or not. Kind of went off without a hitch. So that's one thing, is there's market money coming in. The other, like I mentioned yesterday, is buy the rumor, sell the news, meaning you wait till the event actually happens, and then there's some selling. So I really could see forces in a sell-off today. But tell you what, we could sell off 1, 2, 3, 4, 5%. I don't really care. It's not going to make a difference. And that's why I look at the longer term. Look at all this money that's been made. So if it sells off a little bit and comes down here into 360, 340, it's almost a whatever moment. That is normal motion of the ocean if we do have a big sell-off. So we shall see. Going into the last 5 days, get the SPY put in here, and our specific action you'll see yesterday. Obviously, it's Tuesday, coming off the 3-day weekend. Tuesday here, and then a nice big up day Wednesday, and you can kind of see the momentum. There was a big sell-off earlier once we had the jobs report came in, and then there's been a significant bounce from there. So we'll check that out as we open. Here's the 3 shorts I have for you today. F Fuel Cell, and then FTOC and Max R, all gapping down. We'll revisit those here in a minute. All right, let's go ahead and take a look at the headlines. And scroll back up here, and there you can see, let me refresh these, kind of our mixed numbers, if you will, as far as the open. Kind of muted, so it could go either way today. Taking a look around the world, same thing in Europe, mixed and fairly muted. Asia up decent amount, probably underneath the Trump thumb, escaping from out from underneath the Trump thumb, if you will. Here's our numbers from yesterday. Again, 2% move in the NASDAQ. And again, Apple screaming higher at 3+% yesterday. It's already up another percent pre-market. So pretty big move out of the number one holding out there. All right, Treasuries up slightly, oil down slightly, not a big deal. Precious metals mixed, and then Bitcoin sold off again. So look at this. So I got in at around 31,000 and was up 30% in a week, and then we're already back down to where we are. I still believe the long-term thesis. I do think if you were to peel back the political supporters of Bitcoin, I think you would see more Democrats than Republicans. So I do think that maybe now that Biden is in office, some of the money is flowing out of Bitcoin back into regular investments, if you will, just from a, hey, the world is back to normal. We're out from under Trump. So I don't know. I can't prove that, but that's certainly the feeling I have there. I'm not worried about it. We're staying in it, but it could go back into the mid-20s. And again, it's a long-term theme, and there aren't that many sellers here. So I think there's more people moving in. So the pressure is for it to go higher. All right, let's get back to the pre-market and refresh here. We'll take a look at the headlines. Jobless number, remember the jobless numbers come in on Thursday, and then the unemployment number comes out Friday. Well, the jobless numbers were 900,000 jobless with 925,000 expected. So it's a good number coming off of last week's heinous number. So I don't think that's really moving the market there, if you will. Okay, we aren't going to go through the executive orders. Just know that there's a bunch of them. I did read the Defense Production Act. I think there's 7 steps that all made pretty good sense as far as how to get 100 million vaccinations out in 100 days. If you're local here in Texas, did hear a rumor that Kelly Reeves, if they have extra vaccine every evening, that you can roll over after 9 p.m. and it's a first come, first serve. So I don't know, might check that out. I just heard that this morning, haven't verified it. That's a one source thing, but pretty reliable source. So that's kind of cool. So if other places go into that model where they have all of their appointments, but for the people that miss their appointments, people do that. There might be ways for you to get a vaccine at any age, it's first come, first serve. So the vaccine doesn't go to waste. So, once they crack it open, they want to get it out into folks, if you will. All right, let's see what else we have this morning. All right, don't see anything that is inauguration. We got enough of that yesterday. Okay, so we won't talk anymore about the headlines. Let's go over and talk about our 6 investable themes. The first of which, and I think the easiest is, and when I say easiest, I meant the wrong screen tab there. When I say easiest, meaning the biggest no-brainer, if you will. So grid is an infrastructure play. It's infrastructure and clean energy. Smart grid. You've got all this is buzzword bingo, right? So jackpot. You have clean. You have smart grid and infrastructure all in one. So there's going to be a big infrastructure bill. That's going to happen. So you're likely to get the second or the stimulus bill right away. Again, Biden's pushing for 1.9 trillion. I think that happens fairly easily. There's some fluff in there with the minimum wage, but maybe, it probably goes through to some extent, if not all of it. After that, it's going to be infrastructure. So the feel good spend money on our, upgrading everything. And then after that, it's going to be off into what I think the agenda will be is taxes and raising, corporate tax rate first, and then however they want to handle the other taxes that are out there. So for an infrastructure play, you can get individual names, and some of these names have been crushed. I mean, you can get into Caterpillar if you want. That's not me. I'm not going to do that, but I will get into a fund, especially that has, partial clean energy. It also has smart grid. So think data centers, and things like that. So grid is kind of my number one out there as far as these 6 names that I have for you. Let's go over to Schwab Street Smart Edge, and I will show you the other 5. So you have grid in the upper left-hand corner there. You have Q Clean, which is a pure clean energy fund. So all things renewable. It has not only just electric vehicles, it has wind power, solar power, all of battery tech, all of the cool stuff that is out there and kind of cutting edge. You can see both of these have kind of been on fire, and they hold a lot of the same names, just do the clean energy stuff. But there's still more room to run. We're at the early stages of this stuff. Tesla may sell off, but it is just because it's so high, and it actually never does. But it could. But these things are going to be themes that are going to be around not just for 2 years, but for 10 years. So why not get in on these and just hold them? Wells Fargo is not one of them. How did Wells Fargo sneak onto my grid here? So let's see. Next Gen, that's what it was. So next Gen ETF, again, this is when you think of everything from 5G technology, think infrastructure, making the world a better, faster, more efficient place. That's your next gen fund, NXTG. You have Robot, which is an AI play, so artificial intelligence. So a lot of the names that are behind, like self-driving cars and things that allow us to network. There's some blockchain in here as well in the Robot ETF. Also, MJ is just a pure marijuana play. So again, there's another fund out there called TOKE that I may look at. It's the expense ratio is about half on TOKE. So I need to kind of take a look at if it's all the same thing, then I'm gonna switch everybody over to TOKE instead of MJ. But MJ is far more popular because people know about the ticker. It's easy to recognize there. I've been saying below 20. I bought more yesterday. You can kind of load up below 20, above 20. I think it's time to sit back and let it run. So it's kind of one of those, if you're looking at it, I would get in on it sooner than later, just because of the hard bounce up from 10 up to 20. Kind of need to get in on it. DraftKings has been kind of stable there. Again, it was a SPAC, so that's why you don't see a lot of history here. Ran up to 40, came in, ran up to 60, came in. Now it's back above 50. Does it move higher? I think so. If you don't have any, I would buy a little bit. I wouldn't load up here. You see it does go up and down. So if you buy some here, you can add more later or just have a little bit of it. But I do think sports gambling and marijuana both will get more legalized to more portions of the country during the administration, so folks can tax it. So that's what I expect to happen there. All right, let's take a look at our switching to our short hat here. Fuel cell is the number one that I like for short, and I believe in this one. The other two are something to flip to, but this one is a perfect setup, if you will. $16 to 1609 is where it's gapping down right now. So stock's sitting, right here. It was just there 3 days ago, go a week ago or 2 weeks ago, it was down at $10. So this thing has a lot of room to move to the downside. It had disappointing or a quarterly report either last night or this morning. I didn't catch exactly when it was. I think it was this morning. But again, before the bell, there it is, falling 6%, second session of decline, loss of 8 cents per share versus, a loss of 4 cents. So it kind of has the perfect setup for us to short. So expect to go in there with full size on the short. The next one, FTOC. This one is just gapping down from, there's a merger talk. So the merger talk took it from $10 to $14 yesterday. So kind of fading back in from that. So that's something we can keep an eye on. And the last one is just a mere downgrade in MaxR, which is MaxR Tech. So got a downgrade. It was up at 54 down to 52. It's made a big run up here in the past week. So with a downgrade, that can give it momentum to the downside. So again, fuel cell first, and then we'll keep an eye on the other two. All right, let's switch over to our day trading scene. Over back to Think Pipes. So again, really like fuel cell, and then the other two we'll just kind of keep an eye on. So give me a second to get all set up here. Good morning, everyone. Welcome to the On Time, On Target play of the day. You're looking at the TDA Think Pipes platform. You have 4 screens in front of you. You have the SPY on a 1-minute chart right here. You have 3 shorts, starting with fuel cell, which is gapping down, FTOT gapping down, as well as MaxR gapping down on a downgrade as well. So fuel cell is my number one choice for today. I do think it has a decent move to the downside, and we'll try to get maybe a 20-cent stop in here. We will see. So confirming our numbers, yep, it's in that 5 to 10% window. All of these are on the 5% gap off or gapping down. So we're going to get zoomed in here. So 15.9 is the high of the day. In a perfect world, this runs up to 16, struggles in here, and then comes back down. We saw that out of Wells Fargo. I don't know if it's going to get that high or not. We'll zoom in on these others. Hey, there it did. Okay, we're going to wait for it to establish the high of the day, and then we're going to catch it on the downside. Again, looking for a 20-cent stop, 15 if we can get it. All right, so there it is, moving up, 16, 10, 15. So 15.95 to the downside is where we're going to take it short. There it was, 15.95. We are in the trade to the downside with a, again, 16.15 stop. So a 20-cent stop here. Got into that pretty quick. You still have time to take it. If you take it here, go above the, you might have to go a little higher on your stop. Give yourself 20 cents if you can. So we took it to the downside. So make sure you have your stop in up at that 16.15. It needs to hold right here. And if it doesn't, and then we're out. So that's the way it works sometimes, busting out of that trade. I still like it long-term. I don't sit here and trade all day. But we'll see where this peaks, and then a secondary re-entry will kind of at least talk to that a little bit. It's pretty strong though, moving back up to 280. All right, so where was our winner? It's over here in this MaxR, which is the downgrade. Couldn't really take it here, sitting there. This is going to go on to work. So 1630, you would have had to take it down at 1610 or so. Oh, you could almost take it here and go back with that 16.15 stop again. I don't sit and trade the same trade over and over, because it looks more like gambling if you do that. But I think this trade goes on to work. We shall see. All right, the move you had down in MaxR here, again, open at 52.23. You'd have to have some faith here. It's a lot lower volume. You can see these are in the tens of thousands instead of the millions, which is over here in fuel cell. but this one striped down pretty good. You have a full 3-hour move down on, $50 stock, you think 50 cents. So even if you take it at 52, all the way down to 50.50 would be your exit point. So this trade's going to make me mad. This fuel cell trade really is going to make me mad. But that's the way trading is sometimes. So 1575 would have been the first R, and that's starting to strike down. But that's the way it works. The FTOG did not work at all. This is the merger. Yeah, pulled back on the merger. It looks like it's going to turn around and go higher. So this one would have worked. This one definitely did not work. We busted out of this one, but it's going to go on to work. Man, a lot of action in this name. It is trying to go higher. Look at all these. It's still getting what? 250,000 shares in that in this 4th minute of the day. So plenty of people in this name trading it for sure. All right, we'll come back to this because I think we will see that it actually stripes down pretty big here. All right, what was our long name? I threw in bingo in there if you're going to take it long. Can't remember the story on this one, but it opened here at 85.8, sold off with some profit taking, set the low of the day at 843. So if at 840, 10-cent stop, your entry's at 850, 860. So you'd be up an hour and a half if you took a bingo. And back here, just I'm in misery because this is working so well. 1555 was our second stop, and then 1535 would be the second R is what I meant, and third R down here, which it's going to stripe down to probably while I'm still talking about other names. So while we're here, let's check out Luckin Coffee. All right, selling off back to where it was. It had gapped up here to 989, but 950 is where it closed at yesterday. So actually in the red on the day now. Let's check out Apple. That was up earlier 1%. So Apple, all right. After a 3.5% move yesterday, another 1.5% today. So that's 5% in 2 days. We shall take that. Pretty good stuff. All right, and then let's see. Palantir selling off kind of hard today as well. And then the last one we'll check out is Laser. Has been on fire. It was up like 10% yesterday, continuing up here as well. Okay, so MaxR continues to sell off. So even if you waited down here to take it, you're going to make money in that trade. This has bounced. I thought it was going to go right down to 1535, which is our exit. It didn't. It got down to got within 10 cents of our exit, but it's literally, look at it. It's coming down. I kind of don't want to leave the screen because it's going right to it right now. So being impatient. I know we can check back. Okay, we'll check back. Come on, give it to me while I'm talking about it. 1535 and you'd be out. So yeah, there it is. While I'm talking about it. Clockwork. So kind of pissy that with that trade that we didn't get it. But again, the entry points, kind of everything, it busted us out the top side and then continued to go on to work. So sometimes it's like that. You have to walk those off and move on. All right. Let's take a look at what's going on. Clickstream up 25%. All right. That has been on the move. This is a penny stock. I know that a lot of you don't follow this, but I do. I have a chunk of it. So it got up to kind of chart are we on here? Oh, it doesn't trade enough. That's why we're looking at multiple days. So this is nope. Wednesday. Nope. This is a 5-day chart. This makes sense. It just looks different because it doesn't trade after hours. So it got up to 7 cents, came back down, popping up of over 5 cents today. Clearly there's something going on, but there's really, since it's a penny stock, there's no real news out. Okay. Psychedelic name, same. Laser we talked about earlier has been on fire. There's our Apple up 2%. Where'd it go? Come on. Apple up 2%. That's good news. Amazon up 1.5%. Amazon's been kind of left for dead lately. So good to see some love. Facebook, Home Depot, kind of back to what traditional names. Luckin in the green. I like that. Let's see what's in the red today. Bitcoin selling off 10%. So again, you go in, you hold it, right? So we'll just keep an eye on it every day. Workhorse selling off. Workhorse got a positive article the other day. So I'm kind of surprised that it's selling off. But the big news with Workhorse is now that whole U.S. Postal Service contract that we've been talking about literally for 6 months now, that Trump put on hold, is back in play. Obviously, if Workhorse gets a piece of that, and when you think of contracts under the Democrats, they are far more likely to spread that contract out, so there's multiple winners. So kind of everybody gets a piece, but some get more than others. So I think Workhorse will at least get a piece of that. So let's take a look at where the stock is. So 25 a week ago, selling off down to 22. So that's something you could take a look at if you don't have any of it. Palantir selling off, Neo selling off, Baba selling off after the huge move up yesterday. Jack Ma's been found. Same with K-Web. Okay, back to the main screen. Let's check on the trades again. Yep, you're right. I see the burner with your Max R working there, and it did. There's laser going strong now after we started talking about it. So, all right, let's switch over to our topic of the day. No questions in the Q&A. Last chance to ask one if you want. And what is the difference between mutual funds and index ETF funds? Well, the biggest difference for you to know is that mutual funds don't trade on the open market. So when you think about, get the camera back on here. So when you think about, if you want to buy, that's one of the frustrating things. So you're like, okay, well, I'm going to buy into, say, MJ, which is an index fund for marijuana. And you go, okay, well, I'm going to pull the MJ chart up and I'm going to take a look at it. And it trades during the day, so I can watch it. And I can say, okay, well, it's at 2040. I'm going to set, but I don't want to pay more than 20 because Steve said don't pay more than 20. So I'm going to put a limit order in for 20. And if it goes down and hits it, I'm happy because that means I got my shares at the price I wanted. If it goes screaming higher, I don't care because I wanted that price, right? So same thing if you are, so that's to the upside. Think on the downside of all the folks out there that in last March, when the market's selling off 7%, if you go into an ETF, your MJ ETF, and go bink sell, it's gone, right? You don't have to wait. It's 8:32 in the morning here in Central, and the market's going to just in the process of crashing. You can sell, and you are out, and you can look at your dollars and say, there, I'm in cash. I am now safe. Mutual fund, you can't do that. They don't settle until after the market closes. So if you sell right at the open and the market continues down even 7%, even though you put that sell order in at 8:31 in the morning, it doesn't execute till that afternoon. So all day long, you have to sit there and watch the market fall. You were smart enough to go, I need to get out, but it doesn't matter. It doesn't sell until at the end of the day. So you've got to be like, oh, no, that could work both ways. I got that. But, you've got to be kidding me. You talk about liquidity. If I want to go to cash, and there are times to go to cash. If I want to go to cash, I want to go to cash right now. Period. Dot. Don't care. I don't want to go. I'm going to cash because that's a huge decision. I don't want to say I'm going to go to cash and have to wait, 8 hours to go to cash. Right. I want to go right now. So that's the number one reason for me. So let's look at some other ones. It's not really passive. So sometimes they're like, some people are saying, well, mutual funds are active, index funds are passive. Not true. Index funds can be just as active or passive, either way. It depends on what their prospectus says. So, it depends. Let's see. Tend to be more liquid. Yeah, absolutely. Have lower fees. Yes, absolutely. That's why, if somebody shows me a mutual fund, says this is my favorite mutual fund, I'm like, well, I can find you an index fund that does the same thing for half price. And they're like, okay, pretty good deal. And more tax efficient than mutual funds. So index funds can buy and sell during the open market. So as money comes in, they have to buy the underlying securities. When money flows out, they have to sell the underlying securities, right? So, and they have to do this, I think it's like every 15 minutes. where they go in and have to make this adjustment or something like that. So now it's computers doing it. So don't get, don't be like, whoa, how do they do that? Computers can do that stuff automatically, but that's what's going on. But they are not, there's no wash sale, there's no capital gains, there's nothing behind the scenes like there is with a mutual fund. A mutual fund, they are buying, since they don't close out till the end of the day, they're buying stocks, and they do have to play the capital gains game, if you will. Just because money flows in, they don't have to go out and automatically buy the underlying securities. They can leave it in cash for a hot minute and then buy some more of one of the securities. And same thing when they sell. They can do tactical selling, if you will, instead of just doing index matching. So here's why I bring that up. And here's the number one annoying thing about mutual funds that got them on my radar scope and made me against them but way back in the 90s. And that's we have a down year, right? Those do exist where the market ends lower than it did the previous year. I know, insane, right? But that happens. It'll happen again. So I lose money, say the USA Cornerstone Fund, which I was in for a long time. So say I lose 20% in this fund. So I'm already not happy, right? I mean, I know it happens and they're doing their best. I got that. Say I lose 20% in that fund. Well, all of that selling that went on in that fund, and that was coming off of a huge decade move up like we've had. So you have this huge move up and then it sells off 20%. Well, they have to sell a bunch of those underlying holdings. But when they sell those underlying holdings, they have these huge capital gains. So when I get to December at the end of the year, after I've lost 20%, I now get a capital gains distribution. There's long-term, short-term, and then dividends and interest that come out. So there's 3 entries on your mutual fund thing. And I get hit for like a $10,000 capital gain. So I lost money in the fund, but I'm getting capital gains from the past decade, and I didn't know it was coming. And there's nothing I can do because it's December 28th. So it was like, you have got to be crapping me. And I remember just one year that happened, I was just like, never again, goodbye, sell. I mean, not doing that at all. So they're forced to do some really dumb things tax-wise, where index funds don't have to play that game. They are simply just mirroring the underlying, holdings. So therefore, the SEC doesn't, and the IRS doesn't require them to do all that capital gain stuff. All right, question popped up there. What percentage of dollars are in ETFs now compared to mutual funds? 20 years ago, it was all mutual funds. It wasn't all mutual funds, but yeah, I got you. I mean, the majority. I know what you're saying. I don't know. I really don't know. That is a good question. Let me see if it approaches it here. Probably not, since it was it's a moving type target. Here's the capital gain stuff. It's griping about it too. So I don't know. Let's try a quick Google hit since we've got a second here. Percentage of money in ETF. See if we can come up with a quick answer. Probably not. Let's see. Okay, I don't see it screaming off the page at me, but I'm sure it's knowable. How does the index fund add new stocks? It has to mirror, so that's why. So good point there. Once so Tesla just got added on December 21st, I think, and that and a couple other names. So they boot the other names. So again, it's an index of 500, right? So the 4 names I think came in. So they have to buy those, and they have to match it to the fund. So that's why when you hear something's getting added to an index, it's an auto buy. If you're a day trader, you can trade off of that philosophy, is that it's going to go up because the funds that track that index have to now buy it. So like a VO fund, the Vanguard, basic index fund, or VOO. I can't remember exactly which one tracks the S&P 500 exactly, but they have to buy that stock to put it in there. So kind of crazy there. Same thing with the 4 they kick out. Those are shorts, right? Because they have to now sell those shares to get rid of those funds. Now, what I don't know is how much time they have to do it. If they have to match it up like that day, or if they are given like a month to kind of get, get it to right so you don't see a true spike in the stock out there. But good question. All right, that's all I've got for you today. Thanks so much for being here this morning. Tomorrow is a Friday, so we will see you guys back then. Bye.